And hello everybody, welcome back. I'm Rob Booker, these are your FX Trading 101 lessons. Let's talk about FX hours and news. When I first started trading in the early 2000s, I was getting up in the middle of the night. I was living on the East Coast of the United States, and I was getting up in the middle of the night to do my trading. And I did that for a very important reason. I was a day trader. I was trying to be a day trader anyway. And the Forex market is active primarily during the really early mornings in the East Coast. And what I want to do right now is I'm just going to use Eastern US time, but you can translate this into your own time zone. So assuming you're on Eastern Standard Time, and you can translate this into whatever hours and whatever place that you live, I want to talk to you about what's going on in the Forex market at these hours. So Eastern Time, at about 5 p.m., what you would say Eastern US time, and this is a range, 4 o'clock, 5 o'clock, in that area, 4 o'clock, 5 o'clock, 6 o'clock, rock. This is what you would generally refer to as the close, the market close. It's not really the market close, but you would generally refer to it as the closing of the market. The Forex market is open 24 hours a day, Monday morning in Australia, all the way through Friday in Australia. So you could phrase it any way you want, but the Forex market is essentially open from Sunday to Friday and really only closed on Saturday. It's open all the time, 24 hours. And there's no real closing of the market, Nate. It doesn't like shut down or close off. But at about midnight London time, 5 p.m., 6 p.m. Eastern US time, it's generally referred to as the close of the market. All right. So there you have it. That's generally referred to. There is no real open of the market, but you could say that the market kind of gets going and kind of starts opening around 2 a.m. to 3 a.m. Eastern Standard Time, when traders in London are sitting at their desks. So the majority of the world's FX traders live in London and work in London and in New York City. So 2 a.m. to 3 a.m. at the open of Frankfurt and London and all of those places, Eastern Time, is generally referred to as a super active market time. And short-term traders love action, and that's a really active part of the market. All the way up until about 8, 9 a.m. Eastern US time, when the London market starts to, London slows down. London slows down at 9 a.m. in the morning because that's about 3 p.m., 2, 3, 4 p.m. London time. And so you're getting a huge exodus of all those traders out of the London market. And then from about 10 a.m. all the way to 5 p.m. Eastern Time, everything is generally really slow and not moving very much. So those are the times you want to think about. And I used to get up at 2 o'clock in the morning and trade from 2 to 3 in the morning, 4 o'clock in the morning, 5 o'clock in the morning, because that would be active when the market was bouncing around and moving around a lot. But that's not usually the way that people talk about the currency market. It's the best way to talk about it because you know when it's most active. The best way to talk about it is when it's most active. But the way that most people refer to the market is they talk about the Asian session, the London or the Euro session, and then they talk about the US session, and they talk about sessions. Typically, the Asian session is viewed as slow, and this is morning in Tokyo and Australia when the majority of the world's traders are not awake. And so the Asian session is usually, but not always, slow. The Euro market is generally viewed as fast-moving and active, and this is morning in Frankfurt and London. And that's generally viewed as a fast-moving session when lots of currency traders are sitting down at their desks and doing trades. The US session, which starts in the morning in the US, and specifically around 7 o'clock, 7:30 in the morning New York time, is generally viewed as good, Not great, but it's good. It's not the most amount of activity, but there is this crossover where traders in London and traders in the US are trading at the same time, and that's generally viewed as pretty active. Now, why would these sessions be active, and what creates activity in a trading session? Well, the major factor in creating activity inside of a trading session, is economic news. Economic news are economic reports such as employment reports, interest rate reports, consumer price indexes, gross domestic product, trade balance reports. When we talk about FX trading and the news, we are generally talking about scheduled economic events that appear on an economic calendar. If you go to a website like forexfactory.com, I'm sure it's pretty difficult to see that URL up there in the box. If you go to, it's not too bad. All right, forexfactory.com has one of the world's most famous economic calendars. And it will show you on a daily basis the economic reports which are scheduled for release in the near future. Off to the left here, you can see a calendar, and you can scroll through certain date ranges. And you can look at a whole week's worth of economic activity. You can also sort the calendar by nation and by type of economic report. So for instance, you can click on a tiny little button here that looks like a funnel. So you're going to look for a little green thing that looks like this. That is a terrible drawing, by the way. You're going to look for that right up here in the section. And what this is going to do is it's going to help filter out the economic reports that we look at. What I choose to do is only look at the economic reports that are marked in red. Across all economic calendars on Forex Factory and FXStreet.com and Bloomberg and everywhere else, a red report is generally viewed as something that might create a bunch of market activity. You can also decide that you want to choose maybe only central bank or interest rate related economic reports. Those are my favorite ones because they create the most amount of movement. Employment reports also include a lot of movement, but you might include all of the economic reports that these folks decide are really important. You'll also get to choose which countries you want to choose economic reports from, and typically you just choose all of the ones that are available, but subtract nations that you don't on a typical basis think about visiting. Strange countries. Like, we don't need to see any sort of economic news come out of countries that you don't see economic news on the regular evening news about. So you would choose Australia, Canada, Switzerland, Euro, British pound, Japanese yen, New Zealand dollar, and US dollar. Those are the majors. Those are the most important ones. You click apply filter, and then boom, you get a list of economic reports that are coming out. Now, if manufacturing PMI is coming out on Tuesday, April 3rd for the UK, you can click on this little folder, and you can see the latest release, a summary of what that report means, the recent history of the data, and so forth. There's a whole line of thinking that says that if you compare what is expected to come out in an economic release with what actually comes out, you can have a trading strategy. Some people would say that, oh, you look at the Canadian employment report. And what you do is you see that on March 9th, there was forecasted that 21,000 jobs would be created, but in actuality, only 15,000 were created. Or you could see that there were forecasted in February 10,000 jobs that were created in the previous month, but in fact they lost 88,000 jobs. That's a huge difference. And that massive difference between what was expected and what was real ended up in an extraordinary move for the Canadian dollar. Well, that's the way that people think about economic reports. In reality, all economic reports do, as far as I'm concerned, is they create activity. You can't really predict which way it's going to go. Oftentimes an economic report will come out, it will look like it's positive news for the currency, but the currency will go down. Why is that? It's because the economic report is a catalyst for movement, but it's not necessarily the reason for movement. And there are thousands of different reasons that traders have for trading in the directions that they trade. So you might want to, if you are a short-term trader, look at the upcoming economic calendar, look for interest rate statements, employment changes, and reports like that, And you might focus your attention on days where that big news comes out, because there could be a lot of bouncing around and lots of activity on those days. You might find that those are your favorite days to watch the market. Maybe not, but it's totally up to you. You can also become a student of economics. You can read, there's a variety of books available. I have them laying around the office, but I don't want to go digging for them right now. It's not a big deal. You can read several books about economics if you are incredibly interested. So I would recommend to you, if you go down this route, go to Amazon.com or your favorite bookstore and look for the word macro. Let's see, delete. Oh, come on. You can do it. You can do it. Oh, come on. It just suddenly, we'll go here and we'll see if we can back up. It doesn't appear that we can back up.
I'll be happy to type on a little keyboard for you if you want on the screen.
Oh, here, we got this little keyboard here. Let's delete that and let's type in O, macro economics. In books. Okay, so you can look for a macroeconomics cheat sheet, which is pretty cool. You can look for books about, there's a good one, A Concise Guide to Macroeconomics by David Moss. This is a really nice general guide on getting started, understanding the big ebbs and flows of economic activity in a country. That's a really great place to get started. So you might want to check that out. Anyway, that's a little discussion about hours that the FX market is active and economic news. We'll be back in our next video. I want to thank Forest Park FX as our sponsor. If you're interested in trading FX, contact Forest Park FX to open an account and receive cashback rebates on every trade you place. Go to forestparkfx.com. Forex trading carries a significant risk of loss. Terms and conditions will apply.